Thank you for joining us. Thank you for your patience. My name's Dan White, Managing Director of the Ray White Group, here with my brother Sam, Chairman of Loan Market, and together seeking to provide you with real value tonight. There's so much confusion, so much commentary about the real estate and finance market, so many negative comments in the market, so much uncertainty. Tonight we talk about what's happening now in the market, our observations, what we think is unique observations across the whole sector, and a chance for our customers to consider the best decision for them and their families going forward. Should they sell in the current market? Should they wait? Lots of different things to talk about. Chance at the end for people to pose questions in your chat box there. Please shoot them through. We look forward to getting into them at the end of the presentation.
Yeah, and I think look, it's important. Dan and I, we don't have a crystal ball. We don't profess to be experts, but what we do believe in is transparency and data. So for those of you who don't know, the Ray White Group's been around since 1902. Ray, Dan's and my great-grandfather, started the business back then in 1902. And we operate now in all the major markets in Australia, and this slide shows our market share, which is about 11% of online listing market share. Our nearest competitor is about 4.7. So we do have a good perspective of what we're seeing on the ground today. Loan Market, our mortgage broking business, is part of our family group. We help over 24,000 Australians every year get finance. In fact, we've done $3 billion in mortgages just the last 2 months in applications for customers. And this ability to look at both finance and real estate, the intersection of that, and spot some trends, we think provides some interesting data. And what we want to show you tonight is really what we're seeing and present to you some information for you to be able to make some decisions. A lot of this, we've got people on the line. We're going to talk about Australian data only. The problem with that is that it's a broad set of data. What happens in your market is very much different maybe to what you're seeing, or might be different to what you're seeing here. So reach out to the local offices, 1,000 local Ray White businesses that you can talk to, local loan market mortgage brokers you can talk to, and they can help maybe tailor what your individual circumstances, your needs, what you are seeing, questions you have with the local market. But tonight we're going to talk about a snapshot across the board.
So what's been happening? I mean, so much talk, as I said before. I mean, a lot of people will be surprised how active the real estate market's been, and talking to peers and friends in the community, they're just surprised at the amount of activity that's going on both in real estate sales and in finance. If you look at our last 2 months alone in Ray White Group, over $4.4 billion in sales, so only about 11% less than the last 2 months combined of last year. So not much different. We did conduct over 1,000 auctions. Even though auctions were so-called banned, we still had over 1,000 auctions during that period of time, and achieved auction clearance rates higher than we did in the prior year, and prices have remained firm.
It was amazing actually how much the customers and the team really responded to digital auctions, wasn't it? And just the new ways of doing business. I'm sure that happened right around Australia, but you wouldn't have known that though, would you? You wouldn't have known that data just by looking at some of the media. And there's so many different headlines are concerned about negative, about press. Some people said the market's going to fall by up to 30%, and there was a genuine fear and uncertainty. And in fact, feedback, we did a survey on raywhite.com recently. 40% of those of our customers believe that the media coverage of the property market is confusing, and that really drove the concept of wanting to present what we see, present the data directly to consumers, and allow you to make your own mind up. Let's go through some of the key drivers. We're going to talk a little bit about supply and about demand, and really what we're seeing, how those two factors are crossing up, what we've seen the last 2 months.
Absolutely. So let's go through demand first, which is obviously the key driver of a lot of the market. Demand, buyers, very, very strong over the last couple of months. One thing we've learned, and again been reminded again, haven't we, is the deep love, fascinations that Australians have for real estate, the faith they have in it in times of uncertainty. They still believe in it. It's a safe haven. I know it's a cliche and we can get ridiculed, can't we, by people saying, oh, we've heard that a million times before. But that's the reason why, because it keeps happening. And the last couple of months, more than ever, we've seen that resilience, that faith in the market come through, driven largely by interest rates. We'll talk about that before. And when we talk about property crashes of the past, when we've heard our grandfathers and parents talk about it, largely there were high interest rates, low interest rates now. all-time lows, aren't they? You'll talk about that more in a moment. And here's some more proof of this buyer activity, this demand. Well, firstly, this online buyer inquiries. Let's go through the process of how buyers go through the system. Firstly, searching through newspapers or the local press or online. Easy to measure online activity. This is our chart here showing online inquiry on Ray White websites. And you see there the grey line, which is this year, dropped a lot. At the start of the restrictions, April, May, dropped about 25%. Sure, it's a bit, but probably less than what people thought. And look at it now, above where we were last year. We've got more people looking at property online, doing their buyer search than we did last year.
And that's an interesting stat, but it carries through into the real world. And this is a graph you'll see of property inspection. So we use an app with Ray White agents that measure the number of people coming through and record the people coming through to give information to vendors and reporting to vendors. And this shows what the buyer activity has been, or inspection activity has been. So you can see the big drop off. Those of you who can't read this slide too well, it's about 14,000. The graph starts about 14,000 on the left and it starts on the 16th of March. So that week there was 14,000 people through a Ray White open home. Then of course there was open for inspections were banned and the number dropped off to 4,000. That doesn't mean that 4,000 people were breaking the law. It just means that there were 4,000 private inspections that went in, just individual inspections, not through an open home. And then that you can see that really troughing along right the way through till the 27th of April, that period there, nothing much was happening, and then you can start to see it climb. And where that is now, on the 8th of June, the week beginning 8th of June, is 20,000 people came through a Ray White open home that week, and that is about 30% higher than where it was before COVID came through. So it's not just online traffic we're seeing, it's also real world traffic into open homes.
And then the next stage of the buyer process of this demand side is people bidding on property, either through a private sale process or through auction. And auction, obviously a very transparent process, and we have a lot of data around this that we watch closely to measure buyer activity. And if you look at the chart here, the grey line is showing the number of people that register to bid across our auctions across Australia. We do about 28% of all auctions across the country. We have done over the last few months, so this data is pretty relevant. We've done, our number of registered bidders peaked in May, better than in February or March, more people registering the bid than we did before, and certainly a lot higher than last year. And so these figures of registered bidders per auction are better than we've really ever seen before, even in peak periods of years prior.
Interesting, isn't it? That I mean, some viewers may be in different parts of the market and saying, oh, hang on, we don't do many auctions in our market. And it's true that only about 15% of all properties are sold by auction method throughout Australia. But what is interesting is it gives us the best data, doesn't it? It gives us the best insight into what's happening. So these trends you can apply to the broader market, but we collect it on the auction market, which is about 15% of the total sales throughout Australia.
And the bigger markets too, often the Sydney and the inner city Melbourne as well, which are a really important part of the overall dollar volume, are auction driven. So these particularly relevant for the health of the entirety of the market.
Yeah, and it does, but it is skewed, doesn't it? We'll talk about that maybe in another interview or in a question.
But this demand side, then throwing to you really in loan market, putting a loan market hat on specifically for this, buyer confidence. We've been watching, when the restrictions happened, everyone was predicting all this stuff. We were talking every morning. You were giving us your figures on finance, what was happening, and that's been the key trend.
Yeah, I mean, it's been very busy in looking at finance. Now, obviously, interest rates are very low. There was a lot of work initially with helping clients go through hardship requests with lenders, and we'll talk about that in a minute as well. But the trend, the key standout has been the lowest interest rates in the market for I'm not sure if it's forever, but for a very, very long time. So owner-occupier rates, we'll go through the detail in a minute around what you can get. But it's clear there's been so much more activity, so much more availability of finance for everybody. Banks are keen, they're open for business. In fact, you've seen a lot of people, banks not only have very cheap rates, but also have incentives, cashback incentives to be able to refinance to them and switch across. The loan market we have 62 lenders on our panel, have well over 560 mortgage brokers throughout the country who talk to clients and line them up, try and help them match their needs with what 62 banks offer. what we've seen is interesting is this pre-approval slide. This is the number of pre-approvals that are active, rolling 28 days, active pre-approvals that are in the market at the moment. The blue line is what was last year, the grey line is this year. And again, you can see a stronger level of pre-approvals out at the moment than what there was 12 months ago. But of course, we saw that dip. And whilst the numbers haven't come back to where they were pre-COVID in terms of the pre-approval numbers, you can see there's been a stronger bounce than where it was back in this time last year. I think that's one of the slides. The other thing we hear a lot of talk about is this really an investment or owner-occupiers? What's happening with that? We haven't seen any difference really in the application numbers for investors or owner-occupiers. So at June data, the market we're in now, there is really it's about 22% of our volume of the loans we're submitting are coming through investors, which is round about normal. So we haven't really seen a market difference between is it more skewed to owner-occupiers or investors at the moment.
Let's talk about rates then. What is available out there at the moment in terms of, people are saying, is it still there? These rates are going to stay, and bank turnaround times, have they really got the appetite?
Yeah. So look, you can get owner-occupier variable rates from 2.63% per year. You can get fixed rates, owner-occupier fixed rates, 2 years for 2.09%. There's phenomenal sort of rates that are there. Now, obviously, fixed rates, there's some differences, but you've got to take into account your situation before you go fixed versus variable. Again, talk to a broker about that. One of the trends we've noticed, though, is that the turnaround times for lenders, the time it takes for lenders to say yes or no to a deal, is increasingly variable between lenders. So some are at 2 days and some are at 15 or 16 days, and that's because there's so much more work that's going into check deals, and also it can be because there's been everyone's working remotely. There's been some changes in workflow that's meant that some lenders have found it harder than others. So, but by and large, the markets are strong, and one of the differences is really turnarounds.
So just get organised a bit earlier for buyers.
I think you need to be ready. I think it's another reason to talk to a broker is that one bank might be at 30 days. That you might be able to wait. Maybe you can't. You might need to go to a bank that's at 2 or 3. Again, that comes down to your individual needs, and that's why it's important to see a broker who can understand what you're trying to do and take account of that rather than give any broadcast information like this.
Fantastic. Well, okay, that's the demand side, isn't it? Where buyers have been, where they are now, what we've seen over the last 3 months from the Ray White side and loan market. So let's switch across to supply, the amount of listings on the market. And look, despite all our energies and best efforts as an industry and as a company to keep our vendors engaged in the process, many vendors did withdraw their listings after the restrictions started in late March. A lot of auctions got withdrawn, and many people that were going to come to the market decided to wait. And you see this chart here shows how strongly the industry or the real estate market came into the lockdowns. Really big months in February and March, massive months, really healthy prices, healthy auction numbers, etc. And then you'll see the dip there down. About 40% or more drop in new listings coming to the market. They're people that have signed authorities with us to take their properties to market. But still a decent number of people still coming to market, just less. But it didn't take long for that to change. People in the market saw transactions occurring, they saw auctions take place digitally, they saw private inspection numbers that Sam spoke about, and we're now seeing the new listing numbers come back up. And now we're signing up new listings at the same rate we were 12 months ago. But overall, the big picture on total listings, that chart shows the new listings. Total listings are still down on last year, about 4 or 5% down, and well down, about 8% down on 2 years prior. So there is less stock in the market now than there has been before. Even though demand's holding up, we've seen that supply withdrawn a bit. And that's what we've been saying for some time, haven't we, that the market has been good to sell into. And all through this period of time when listings were falling, we were saying to our customers, hey guys, now's a good time. There's buyers out there, less stock to compete with for yours, so come on. And then we saw our auction clearance rates be really strong. I mean, Sam spoke before about auctions. We did 62% clearance rate last week in our auctions, which is a good number in any market.
Yeah, well, it depends on where you're from. Like some people might look at that number and say, hey, 62%. I'm based out of Sydney. I'm used to seeing numbers. I heard it was 80%. What's different?
Yeah.
And it is important, I think, sometimes to see that figure's a national figure, isn't it?
National average, yeah.
And 62%, how does that compare to normal?
Well,
for those who are trying to calibrate
Yeah, that includes Sydney above 80. We've got strong numbers in Melbourne as well. So you're right, some markets like Queensland and other big auction markets don't have the same clearances as, say, people living in inner city Sydney or inner city Melbourne. But 62 is a strong number in any market.
One other thing, sorry, just on that too. Some people who are not in the market or have sort of don't understand right now might be saying, well, does that mean if 62% sells, does that mean 38% don't sell? Does that mean that it's a 6 in 10 chance of me selling in my property? Or
so that's what's sold by auction day, and so obviously negotiations post auction, follow up and that sort of thing. So yeah, of that balance of stock, some of that's get cleared, some doesn't, depending on where the market is. But of course, that's our role to ensure that property continues on post auction if it doesn't sell in the day.
That was a vendor to make an informed decision as to what they want to do, right?
And then how that leads to finally to sales, the demand and supply things we spoke about. Here's a slide here showing that overall sales figures. Not surprising that our sales numbers, wow, look at those numbers in February, March, a really super strong market, and then coming off number of sales, but that's just because it matches the number of listings. We had less stock to sell, strong buyers there. Our conversion of listings to sales remains strong, and look at where we are now, very similar sales on a conditional, unconditional basis as we speak now. So fascinating time. And overall, we've seen prices, we saw that, people talk about prices coming off. If you take the peak of that early March, yeah, maybe we've lost a bit of that premium. But if you look back compared to prices of 2019, we're certainly finding that right across our markets.
So, I mean, that's one of the questions, one of the things you put on there is we know that some people might be thinking of selling, might be saying, should I wait till spring or should I sell now? What should I do? You know, should I wait till then or move on? That's still the question. That's the question we put up, be posed.
Yep.
We haven't answered that yet.
Let's get into that now. So I suppose before we start talking about specifics of where we are right now, let's just talk generally about, is there a good time to list and get a better price for your property? And I think the general perception in the market is, if I list in spring, I will get a premium result. And we're already hearing that from our vendors saying, well, I hear there's a bit happening. Well, I'm going to wait till spring to list. Well, there's this sort of chart here showing median prices and how it changes over the year. This is our average median house price data over the past 3 years.
This is Ray White data.
This is Ray White data showing what's the median price at the date of contract, not when it's listed. And you'll see here, when properties get sold, they get generally the best prices at around late August, September, through till around November. But not much difference between sort of September and November. That's when it's sold. So our discussion around now is, think people should wait to list to September. We've never believed in that. We believe that if you list now in the winter period and get ready for sale, you'll be probably selling sometime in August, late August, early September, by the time you get your property ready, by the time you market it and get things done. So when we talk about waiting to list till spring, this has nothing to do with 2020, it's a perennial sort of question. And our data shows that getting ready to list now and getting on the market now is a good time. Why? For the same reasons we've seen this year so far, less stock on the market and buyers are still active. People are going to be around this winter too, aren't they? They'll be on travelling as much, so certainly the activity there. So,
well, the seasonality is going to be a real question mark in every business, isn't it? Like how is seasonality affected with what's going on? But you're right. There is no interesting thing is that the data shows out there's no mathematical reason to wait till spring to list.
Absolutely not. Absolutely not.
And then January. You want to talk about January number there?
Well, I think the January number they're talking with the guys. I think it's more regional properties sold at a lower average price point than the capitals in January. Obviously, big markets for us in the coastal regions, parts of Queensland, New South Wales, etc. So that explains that lower figure. But I suppose that's the overall big trend. Let's get back to 2020. There's no doubt there are risks ahead in the market in terms of people deciding what to do. Let's just sort of talk about some of those risks and how that might play out in the minds of ourselves and our customers.
And look, I just sort of want to emphasise again, we're not saying we know what's going to happen. No one does. Anyone who says they do, you've got to sort of really caution that. So how can someone know that, given what we've been through in the last 3 months, let alone what's going to happen in 3 months' time? But obviously there is some risk that people have spoken about already. So the JobKeeper and JobSeeker, they're due to end in September, and that some people are saying it's going to lead to changes in the job market. We're going to see a lot of that deferment that mortgage that banks gave clients back, in mid-March and April will extend through to mid-September and October, and there's concern saying, well, if there's people coming off that, there's going to be more stock. Now, there's two schools of thought on that. One is that it's not nearly as bad as some of the headlines predicted, and that a lot of people are still paying off their mortgages even though they've got deferments from the banks and they just wanted some liquidity. But
how many deferments are there? There's quite a big number, isn't it?
I think there's about one in 14 mortgages. 1 in 14 mortgage holders got a deferment approved from the banks. Big number. But then there's recent data pointing out that of that 1 in 14, 1 in 5 of that 1 in 14 is actually is really concerned about what they're going to be doing. That there's a significant part of that of the people who got deferments are still making payments. But anyway, I don't want to make any comment because I don't know the data. I'm just there's obviously concerns that at the end of that September-October period, there's going to be some pressure. And I think what this data is showing is if that's a concern for you, and maybe it is, maybe it isn't, and if you're in a situation where it's causing a lot of anxiety and you're saying, well, should I sell now or not? The data's showing that now the market's working, and I think that's good news for every homeowner that the market's still fully viable and fully operational.
So let's go through that then. So the various customers we're speaking to, you either got people, you mentioned before, people concerned about financial issues with their own sort of position, uncomfortable to talk about, but obviously people might be thinking that way. People wanting to upgrade, buy a bigger property, and people wanting to downsize. Family things often drive real estate decisions. Families get bigger, or kids move out, all those sorts of things. All those three people just trying to mount the argument to wait. Why wait when the market, there is risks down the track? There is stimulus coming, obviously, out of the market for the reasons you say. Buyers remain strong there at the moment, and there is we're having a seasonal dip in listings. People waiting, as I said before, to list in spring. So, in answering the question, sort of reverse it a little bit. My thing is, I can't see a reason to wait. If you're thinking about this, now is an opportunity in the market that may not be as good down the track.
Yeah, I think that's the point of this, isn't it? Like, everyone's got to make their own decision. But this is about trying to give some information that enables you to do it. Now, in your market, how that works, what's happening, that's the best way to get more information locally is to go to the local office, get information. They've got the local data they can give you. This is more a chance. We're not seeing any reason to say this is a problem. You've got to wait for some reason. We're not seeing that.
Of course, real estate, we often get criticised with the thing, of course you want people to list, all that sort of stuff. Obviously we understand that. However, all these people saying there's these concerns down the track, we're just saying, well, now is a good time. There's a dip in listings. We showed what's happened despite lockdowns, restrictions. We sold all this property at good prices. Why would you wait? Finally, though, Sam, buyers, obviously the counter of this is, we'll have buyers, and if you're saying there are risks in the market and go now, the buyer question, our confidence that buyers are going to be there, obviously, it's critical to this whole discussion.
Yeah, and look, obviously the buyers, we'll obviously we keep monitoring buyers as we go, but the good news I think for buyers is that I think the Australian economy so far has come through remarkably well. The health data is good. A lot of the economic data compared to a lot of other countries around the world has been positive. Interest rates, I don't know of anyone who's really talking about interest rates rising. So I think interest rates be comfortable with things like, and it is still cheaper in many cases, not in all cases, but in lots of markets, it's actually cheaper to be paying the interest on a mortgage than it is to be paying the rent. So, the difference being the capital payments actually of the mortgage you make, which is effectively forced savings, the delta between, it's actually cheaper to pay off a mortgage rent. So I think for those sort of reasons, it still does make sense. But of course, property is a long-term game, isn't it? It's not a short-term, you've heard that a million times. There is cycles, property go up, does go down. And you do need to make sure that you've got flexibility in your ability to cope with those ups and downs, like this.
Yeah, absolutely. And I think, as you said, before, trying to game the system and buy at the particular time when you have a need as a property investor or as a family, often it can be dangerous to sort of pick the bottom or whatever. But I suppose the key thing, as we've said before, while finance remains where it is and where it's so strong, it is the key sentiment driver, the key confidence driver for buyers. It's there and should be there for some time, which underpins really a lot of the activity that we expect to see over the next 6 months. But as Sam said, look, we're not economists, no one has a crystal ball, but what we wanted to do tonight was confidently sort of show you what we are seeing now. There is a lot happening, the market's active, we like talking about the now, we're in the now business, we communicate what we've done tonight in a written format every week for our members to distribute their customers. If you'd like to see that or receive that every week, you're very welcome to, and we appreciate the opportunity to talk through with you the issues. We have some questions that have come
Sorry
through.
again about the timing. I know the volume and the snaffies on that, but we're able to stay around if you are to answer some questions. Apologies again for being late. If you've got to run, the local offices, local brokers are able to help your inquiry on if you want to know specifically about your market.
Okay, so the first question is here, has there been any correlation between states and real estate activity and the lockdowns, etc., in each state? So obviously great question. Obviously we know there's been different rules in each state around open homes auctions. We know infection rates have been very different. Surprisingly, the real estate curve in every state, the list, all those charts we showed before, very, very consistent across the market. Normally we don't have such consistency across the market, but very much so in the last 3 months. Maybe Sydney starting to pull ahead than the others, the resilience of the big Sydney market sort of shining through, but other than that, really consistent trends right across the board. This next one.
If I want to sell, what are the things I should be thinking about doing to start the process? Well, you're better off talking about that.
Well, I think obviously everything, education in the process is everything. The real estate side, understanding your market, the finance side as much as anything, getting in touch with a broker to really understand your financial needs or your requirements. Obviously, we believe that our members can provide you with the best service to let you know what is happening now in the current market. And I think the important thing is to educate yourself directly with what's happening on the ground. Don't rely on the experts, don't rely on anyone, do your homework yourself. There's plenty of things going on that you can go and see firsthand, both in finance and real estate, and that's essential to anyone considering.
Some auctions, get a feel for that.
Absolutely. A question here, I heard they're going to get rid of stamp duty. What does that mean if I want to sell?
Yeah, well, so we would love to get rid of stamp duty. I think it's a tax that is, many commentators have said how, and it's an insidious tax, it's a lazy tax, it's a tax that doesn't give a multiplier to the economy. So we'd wholly support its abolition. I just don't know when that's going to happen. I mean, we've heard politicians talk about taking off taxes a while. I haven't seen it happen too fast. I'd love to be proved wrong. I do know that whatever, if it happens, they're going to need to have some sort of transition phase, I would have thought. And the discussions that we've seen have been around looking at a transition program of sorts. But I don't know if there's any
I agree with you. New South Wales is going to replace $9 billion. Let's hope they can find a solution. It's going to take a lot of political will. What's happened in the ACT, it's a good case study of transition, which is great. So hopefully it will happen. I just don't think it should impact anyone's real estate decisions today. It's too variable, it's too hard to quantify. Be aware of it, but I wouldn't factor any of it in. Question here from Karen. Any thoughts on capital gains tax if selling now? I mean, this is
you've got to see. Unfortunately, this is one of those ones with it's your own tax. It is your own situation, and we aren't tax advisors. We can't tell you. We can help put you in touch with some accountants if you don't have one, who can give you better advice and qualified advice on that.
But I think it's one of those personal ones. Obviously, that we'll leave that with you. There's ability for us to answer that through the forum, maybe later on or after the session.
We can put in touch with people who can tell you.
Okay, question from Jay. Do online inquiries have a relationship with price and overall demand? This is a really important question. Of course, there's no direct correlation.
We don't know yet. It's one of these things we're going to find out, isn't it, really, to track that more in time.
Yeah. Well, look, I think what it does show, it shows a barometer of a number of people. The question then becomes affordability around finance. Will that hold? The question then becomes how much stock's in the market. Is there enough? Is there too much? Is there too little? So what it does do, it underpins a large part, not all of it, the demand drivers. And we think online's relevant. Obviously, open home data is probably a bit more relevant. And finally, auction bidding numbers for us is even more relevant. So all those things getting closer to the transaction, the data gets a greater correlation. Okay, question.
I think on that, sorry, if there's any budding economists out there who are want to get hold of some data from us and run some correlations, we'd welcome some people to come in and just see, have a look at it and tell us and answer that question. It's a great question.
Okay, Tracy, great question here. This is very topical, obviously been up in the news. There was a report today in the ABC, the RBA wanting to pause real estate transactions, mainly established homes, because they were really worried. This is in April, I think it was the emails internally in the RBA. They were really worried, so there was an emails going around saying maybe we should pause the real estate market. So I read that this morning. I couldn't believe what I was reading, to be honest. I mean, that would have been a real huge issue. I think that the fact that the industry stayed open and was able to do so many sales, and not only we're talking about real estate sales, we're also talking about property management, it's a whole other issue. The fact that so much occurred in 2 months kept the industry employed, but more importantly, I think, gave every homeowner confidence in the value of their property. And for that to have been taken away from our community would have been a huge confidence blow for the whole place. So I'm so glad that didn't happen, and I hope they won't think of that sort of scenario again. And I hope they're not thinking about it now, because certainly we don't need it. There's an active market, there's a deep market, no one needs to be paused, no one needs to be stopped. Last question, Graham.
Where do you see prices going in the next 12 to 24 months? Great question, and if I can give some my view on it, and you might have a slightly different view, is that we're going to be looking at prices are going to be determined by supply and demand in every marketplace. One thing that will be the question will be is how those two factors intersect. I don't see any issues around the key factor on buyers will be employment. How bad does unemployment get? At the moment, I think we saw it today, it was at 7 and a bit percent. Forecast to go to 8, not to double figures anymore, but I know that forecasts all vary. But if your belief is that unemployment won't go into double-digit figures, and we're closer to the peak than we are to where we were, that's probably the biggest negative impact on demand. Rates, I think, will be low, so I don't see that changing significantly. Then the supply side, you're going to see, well, is there going to be a fundamental flood of supply into the marketplace? And that's going to come down to, I think, again, the same sort of thing, unemployment. And where do we see unemployment go to? Will there be forced sales into the market? Two things, I think. One is the banks have shown they're responsible around this. They want to try and look at how they manage this process as best they can. But they're your risks. Yeah, both of which come down to really unemployment. The other one we're talking about is immigration coming in, net immigration coming to Australia, and that being a downward effect on demand. Yes, that will be a factor in the short term. Once we're through this, then we'll start to see longer term growth coming back through that. Whether or not investors will take the slack in that market will determine. That's probably the downward pressure on pricing. So I'd see my view is it's probably going to be fairly flat pricing over the next 12 to 24 months. But again, I've got no crystal ball. I agree, no crystal ball from me either. All I can say though is, in the next few months, in the now business we're in, I'm confident we can deliver for our customers and deliver prices that will be in line with their expectations. And that's our key message tonight. We can deal in that now market for you if your needs dictate that, for those reasons we spoke about earlier. But guys, we're out of time. Thank you so much. We'll send you an ebook after this detailing with this presentation, the video. If you'd like to keep getting our information, please contact your local agent or the guys you work with in Ray White and in Lion Market, and we look forward to working with you in the months ahead and keeping you fully informed about what's happening. Thanks, mate. Thank you.
Thank you.